Hello and welcome to Lipper's Fund Flows Insight Report. I'm Jeff Tjornehoj. For the week ended January 11, 2012, investors added nearly $11.5 billion to the conventional mutual funds industry. Perhaps it was a combination of saving more for retirement or finding value in lots of places, but whatever the case may be, investors added money across the board to all four of our asset classes. Let's take a look at those groups. Starting off, equity funds had about $1.3 billion in net new money, but leading the charge this week was fixed income funds, which took in $3.9 billion. Next, municipal debt funds took in about $1 billion, and finally, money market funds had net inflows of about $5.4 billion. As I said, there may be some resolution work going on here, but the January effect for flows has been a positive one for equity funds. Again, with about $1.3 billion behind them, it's a good start to the year. What we saw here was equity income funds take in about $600 million. They've been leading the charge for equity funds for quite some time now. Next were international funds, which took in just under $600 million too. Now on the ETF side, some of the leading fund flow achievers this week was the QQQ, the NASDAQ tracking ETF, which took in about $2.2 billion. Next after that was the DIA, the Dow Jones Industrials ETF, took in about $1.4 billion. But at the other end of the spectrum, we saw the SPY, the S&P 500 tracking ETF, lose about $1.9 billion in net outflows. The next group to take a look at is taxable fixed income funds. Here, $3.9 billion was a fantastic week for these funds. Investment grade debt funds had about $1 billion in net new money, but high yield funds have also taken a shine in investors' eyes. They achieved about $900 million in net flows between mutual funds and ETFs. This was one of the best weeks on record for high yield funds. Now, they've only had 3 weeks of outflows since the end of August, so high yield is definitely back in flavor for investors. Here again on the ETF side, we saw variations. We saw the iShares 1 to 3 year Treasury SHY was not so shy. It took in about $500 million this week. The iBoxx High Yield Corporate also did very well with about $450 million in net new money. And on the other end of the fixed income ETF spectrum, the SPDR 1 to 3 month Treasuries, ticker symbol BIL, had outflows of about $300 million. The next group we'll take a look at is municipal debt funds. Again, they had about $1 billion in net new money this week. This was a very good week for them. In fact, between mutual funds and ETFs, this was their best week since March of 2010. Leading the charge was high yield funds with about $300 million in net new money. The general and intermediate municipal debt funds group combined had about $440 million in inflows. So between high yield muni and the general and intermediate space, we saw the bulk of assets go into those three groups. The last group to take a look at is money market funds. Again, $5.4 billion for them. This was definitely a difference between investors, with institutional investors adding about $11.7 billion for the week, while retail investors withdrew about $5.3 billion. The rest of the difference was about $1 billion subtracted from tax-exempt money market funds. Well, that'll do it for this week. Please join us again next week when we take another look at what happened with flows in mutual funds and ETFs, and join us online at lipperfundflows.com for more up-to-date information. Thank you.